What's going on, everybody? I am coming to you really quickly just to kind of give you a rundown of what happened in the market today, and I want to stress how that can affect you. So my favorite ETF, ARKK, today, it opened up about 1% up, and then all of a sudden the market took a huge dip. All right, it just kind of sold off really fast, and ARKK shot straight down. Okay, it shot down. I think it was down 2.5% maybe on the day, and so I decided to buy at that point. You know, very rarely does it fall that far and not recover. So I bought it as soon as it dropped. Now, right now at 3 o'clock, it's back up to even. So I gained 2% just today, just from looking at my phone for 2 minutes and realized that it was so far down. Anytime that an ETF like ARKK that does really well over time drops 2%, I'm gonna buy in. You know, we've talked about dollar cost averaging and putting your money in at those low points. Well, that's what I did today. Now, let me tell you why 2% is a big deal. Let's say that you're putting in $10,000 in ARKK, all right? And let's say that today it went up 2%. Well, that's awesome. You just profited $200 today, all right? $200, that's a great day. You do that every day, that's awesome. But listen to this. If you do $200, 2% every day on your $10,000, you will have $50,000 plus at the end of the year. Let me say that again. If you put $10,000 in ARKK in these low points and you catch 2% gains per day, which is hard to do. I'm just going to tell you that 2% a day is a pretty good gain per day. All right. Typically, you're not going to do that, but some days you're going to gain 4 or 5%. Some days you're going to lose 1% or 2%. So what I want you to understand is if you gain an average of 2% per day on your $10,000 at the end of the year, after 252 trading days, because that's how many trading days there are in the year, you will have $50,000 plus in your bank account profit. That is why dollar cost averaging is important. That is why following ARKK and ETFs that you believe in and buying it when it dips, buying it when it goes down, buying it when it's as low as possible and letting it recover and then taking your money, okay? I bought it today as a swing trade. I invested today when it dropped as low as it was gonna drop. When it was down 2%, I put money in my long-term ETF, and I also put money in my short-term swing trade. And I sold it at 3 o'clock, right before I made this video, okay? And I made my 2%, and I have my money in for my long-term investments that are gonna keep growing for years and years and years. Now, I want you guys to understand, 2% is a huge deal, okay? If your ETF drops 2%, buy those suckers up. Get as many shares as you can at that low price. You don't know when it's gonna drop like that again. It may do it again tomorrow, and I will be buying it again tomorrow, okay? So you have to understand what you're looking at. You have to understand why we buy on these dips, and you have to understand small increments each day is a huge deal of money at the end of the year, okay? I just wanted to come with you guys real quick, use a real life example like what happened today. I got a lot of texts today and it made me proud, and they were like, hey man, I'm looking, ARKK just dropped a lot. Should I go ahead and buy, you think? I'm like, heck yeah, man, go buy it. Buy it right now. If that's the ETF you want, it's your money, you do what you want, but I'm buying, and they did, and they made money. And that's what it's all about. It's not rocket science, okay? I hope this video helps you guys. I hope it opens your eyes to how much just 1 or 2% per day can really grow over 1 year. Think about what it's gonna do in 30, 40 years. It's gonna be crazy. All right, so guys, keep investing, stop saving. I'll see you next time.